Well, now, this is a question that I always get every time. Now, Joseph, between money market fund and shares or stocks, which one is the best to invest on? It's a question that I always get on my inbox. People text me inbox and, oh, by the way, if you can as well text me, if you'd like to get a personalized guidance and information on investment. My number is always on the description of this specific video. You can grab it, call me or text me, or you can as well get my email out there. So the question is this, people always ask me, Joseph, between a money market fund, and shares or stocks, which one should I go with, or which one should I pick, because I want to invest in all those kind of things. Guess what? Now, this is that video that I answer all of you to actually make a decisive and a good decision as far as the investments are concerned. Listen, one thing. See, okay, let me just put it on the board. They say if you think it, you do what? You ink it, for sure. Now we are talking about MMF, that is money market fund. If you didn't know what is an MMF, and then what is shares, and how exactly which one is the best when it comes to investment. See, there is something that I would like to explain to you even before I even start writing. See, when it comes to the world of investment, or when it comes to making a decision of investment, investments are just vehicles. For example, if someone talks about money market fund and shares, these are vehicles. What do I mean? See, okay, this is the success destination. Let's say this is the destination of the success, okay? So what happens, and you are here, okay? And you have some cash, okay? And you want to invest this money. This is the money that you want to do what? You want to invest. See, what happens, we all need to come to here to success. This is the destination, all right? So what happens when one picks the money market fund? You decide to ride all the way to that particular place using the vehicle called money market fund. Another person may say, guess what? I still want to go back to, I still want to reach that destination, but I'm going to use a different vehicle. And that vehicle that I'm going to use, it is called shares. So it depends. All these are vehicles of investments that takes you to the destination and the success. That is the destination. Now, the question is this. These different vehicles of investments, they actually perceive or achieve different goals. They have different goals. What do I mean? For example, what I may have as a goal, as a purpose, they may differ actually from a different person. Okay, for example, if you compare me and Faith. For example, Faith has a savings. Let's say me and Faith, we have same amount of money. Let's say me, I have, is it me I have? But is that correct English? Okay. I have, I have 100K, and Faith has 100K as well, and we want to invest. But we have different perception of investment. I personally, as Joseph, I want to invest my money into a situation whereby I can as well access it at any given moment. I don't want to fix my money. I don't want to put my money somewhere where it's a bit entangled. That when I want my money, I have to sell something for me to get back my money. I want to let my money be in what we call the liquid state. The liquid state in finance, liquid state simply means money, it is in its money form. I don't know whether I'm even making sense. For example, let's say this pen cost $1. Then I have $1 here. So I pay this $1, then I get this pen. But I'm assuming this pen does not depreciate, it appreciates, then it means I own this pen. So for me to get back my money, then I have to resell this pen to get back my money. And obviously that process of selling the pen, it takes time. Therefore, it means if then I'm operating under emergency, I may not be able to access my money within a click of a button. And that is exactly how the shares perform or functions. Then when you talk about the money market fund, you find you have this money. Instead of now buying the pen, I tell you, you own this shop of these pens. Now take this money, have it with yourself, invest, but guess what? I can show up at any given time and I can get my money back at any given moment. And the owner of the shop says, no problem. There's no problem. You give me my money. Let's do the business. And by the way, if you would like to get your money, if you apply your money today, if you want to get your money today, a day or two, you're going to get back your money. See, now it depends. So if you want to take your money and invest, either with the owner of the shop who sells the pen, and you can get your money at any given time. And remember one thing, money actually grows each and every day if you put it in a money market fund. So there is increment of that, what we call the interest each and every day. Then what happens is that money, you can be able to access it at any given time. But when you go into shares, all right, into shares, unless you sell back the pen to get back the money, that is exactly how it functions. Now, what the question is this, what is the best? Because that's the question, that's the reason why you clicked on this video. And I want to spend a lot of time. And by the way, go ahead and like the video and make sure that you subscribe, because I do upload a video each and every time. And make sure as well you do comment on the comment section. That's like telling me, hey Joseph, thank you very much for whatever you are doing. That's like buying me a cup of coffee. You don't even know how much we YouTubers, love when you like our videos. We feel so good, all right? It's like massaging our ego. So come on, let's go on, okay? See, so which is the best? The best here depends on what you want. So for you to define the best, and by the way, remember one thing, there is nothing like the best investment. The best investment, it's you simply trying to mean like, I want an investment that I can access my money at any given time. It's giving me a profit every month. And at the same time, I want an investment where I buy up. But we don't have something like that. What we have different investment that achieve different goals. It's like telling me, hey, Joseph, I want to marry. I want a wife who is tall and dark and also short and brown and fat and thin. I mean, we don't have that kind of a description of a single individual. You either go with brown and short, tall and dark, thin or fat or something of sort. You get what I'm saying? With all the due respect, I'm not saying like someone is fat or whatever. I'm just using this as an example, okay? See, the point is this: when you ask which is the best, depends on what you want. By the way, if you ask me which is the best, I would say you go by both. Why go by both? Because if you go with both, guess what happens? It means that you're achieving two things at the same time. Why? You have some, for example, let's say you have the ability to save like 10K every month, okay? You can save 10K every month. You can have this amount of money. You can say, hey, guess what? 5 goes to MMF, and then the other 5 goes to shares or the stocks. Why? The 5 that is on the MMF, I can access it at any given moment because it is in liquid form. You together. Now, the other 5 is on shares. Shares, on the other hand, I always tell people, if you want to get yourself into shares, there's something that shares achieve. Shares has what we call, has a high volatility. Volatility here, it means that you can actually buy shares in the morning. By the time now, before the market closes, you find it closing with a loss. And if you're just a speculator instead of an investor, you might feel, oh my goodness, I'm losing money. Things are not going good and all those kind of things. Then tomorrow morning, when you wake up, when the market opens, then you realize you made a profit. Wow, amazing. Oh, amazing. Then after another 2 hours or something, oh my goodness, shares have gone down. See, there is that sort of a roller coaster kind of a things, especially when you zoom in. See, excuse me, when I talk about zooming in is when you're making decisions within hours or making decisions within days. I'm telling you, if you have a simple heart, you can even get diabetes and blood pressure, because shares keep on going down, up, down, 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 then up, 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 then down. See, that roller coaster of feelings and emotions. So don't be a speculator. Get into a shares. And by the way, I always tell people, if you want to go into shares, go with money that you know. You don't hurry that money. It's not a money that you put in because you want to buy, some snack tomorrow. No, that's not the money that you put there. Put that money then in a money market fund, because shares, what happens, I would love to, for example, for those who, I really wish I will get this point. It's a bit complicated, but I hope you'll get it. So, for example, when you go to a graph, especially maybe say when you're doing forex trading, okay? When you zoom out, when you look at it from a point of 1 year in terms of years, you'll actually see the curve is going up. But when you zoom it, you'll actually see a lot of what do you call? We call noises. We call them noises. You see a lot of noises. Up, down, roller coaster thing. No. So when you invest on shares, I would love to view it from a point of a long term. Just buy. For example, sometimes I take like 3 or 4 days before I check on how my shares are performing. But unless maybe I want to buy, that's when I'm actually, after this video, immediately I just want to buy some few shares. Remember what I told you? I always buy shares worth like 2,500. That's exactly what I'm about to do. And it's good to do that. You see, I usually buy with that money that I know I don't have any stress with this money, just 2,500 or 3,000, sometimes 5, 10, whatever. Depends on how that month has been, okay? So I just buy those shares and keep them there and quote unquote forget about them. I don't even have any hurry. I don't hurry those shares. I don't even push a lot. I'm just, for example, I'm not employed by any government. So I look at it from the point of, what do you call it? This thing that you get, a pension or something. Yeah. So now when it comes to money market fund, they give you interest each and every day. Each and every day there is interest increasing there, and they pay you at the end of the month. So they say it's compounded yearly, credited daily, and payable monthly. That is exactly how the money market fund works, and you can be able to withdraw your money at any given time. So if you can actually take that money that you save per month and half it, or maybe divide it, doesn't have to be half, okay? It can be maybe 70% you put it to where it is liquid, where you can access it at any given time. The other cash you can put it into shares, whereby hey, guess what, this amount of money, well, sure, may not pay me today or tomorrow or something, but look at it from point of 2, 3, 4, 5, 7, 10 years years from today, I'm gonna be in a situation whereby I'm quite amazing and safe and secured as far as the finances are concerned. So those are the nitty-gritties that you really have to consider before putting your money into any given investment. Okay, now the question is the ultimate answer to this question. So what is the best to invest on? Is it shares or is it money market fund? So the question is, none fulfills or none actually answers that question ultimately. Go get both. That's what we call the diversification. Remember one thing what I told you, by the way, diversification is not only spreading your risk out there, but at the same time it's also safeguarding your property. Remember one thing, I told you one thing. The moment you get money, the first principle is not even investing it. The first principle is to actually safeguard the money, is to own the money. Okay. And I always love to give this example. Let's say today, just write you a check and credit a million bob in your account. I'm telling you what, you already, that a million bob is under your name. You are a millionaire. So the point is not even about investing. The question is, how can I safeguard it? How can I prolong the ownership of this money? That is exactly what it is. So when you diversify, it means you're not putting all your money at a risk. Okay. For example, last year, Kenya's Nairobi Securities Exchange was actually voted as the worst performing security exchange, not in Africa, but the world. But guess what? You buy when nobody is showing at the shop. And I repeat this, probably you're about to ask me what the best time to buy shares. You see what? You buy when nobody is showing at the shop, but you don't buy when everyone is at the shop. Because the moment when you go to buy something when everyone is at the shop, the demand rises. Remember one thing called the demand and supply? The moment you have a high demand and maybe you say the supply is constant, then it means there is an increment of price, all right? The same case happens. Don't buy shares when everyone is talking about them. Hey, go buy shares. Shares are amazing. You're doing good. We're getting dividends. No, you missed out. So when nobody is talking about it, when you see all those negative news, the shares are tanking. For example, people, hey, foreign investors are withdrawing from Nairobi Securities Exchange. That's the time to show up there. That's time to buy. That's the time to become part of ownership of that given institution. That is exactly how you do it. And let me tell you one thing. Most of the best moves are made when everyone is asleep. Asleep, in literally here, it means, figuratively here, it means like you buy when everyone is not even talking about it. That is exactly what happens. See, we don't have a lot of volatility and fluctuations when it comes to money market fund, yeah. But obviously they're there, but it's not that we have in terms of the shares. So what you are supposed to understand again in terms of the risk, if you're a risk averted individual, then you might incline yourself towards the money market fund. If you're kind of an individual who love to take risks as what have you, then shares is your thing. So anyway, that is exactly what it forms. And by the way, by God's grace, I'm gonna come here again and talk about treasury bills and bonds. Which are the best? And again, I'm gonna run that against the money market fund. So by the time now you're picking your best investment, you already know what you're getting yourself into. And by the way, don't forget one thing. Hey, if you'd like to get my services, you can go ahead and shoot me that comment on my WhatsApp or whatever the thing is, and we can have to talk about business. I also have booklets about these all areas. I have a booklet on shares. I have a booklet on money market fund. You can read it by yourself, has all the information, and each copy goes for $2.80. Yeah, that's like a $2.50 or something. Yeah. For now, it's a goodbye and see you in the next one. But don't forget, hey, hit that like button, make sure to subscribe, and also comment on the comment below. See you there.